Hi, and welcome to another one of our videos. I hope you're having a great day. Today we're going to talk about Bitcoin. It has an 8-year compound annual growth rate of 235%. Wow, that's huge. Short disclaimer, I'm not a financial advisor. This is not financial advice. This is my opinion. I'm not smarter than you. You are smarter than you realize. Do not trust what I say. Do your own research. So, this article here on Pantera Capital talks about Bitcoin's 8-year compound annual growth rate is massive. Here's the thing I want you to think about. If you invested your money into a bank CD or a bank deposit, a savings account, say, you might be lucky if you can get 1% in these days with this time. If you invest in the stock market, the S&P average, for the S&P 500, their average rate's somewhere around 8%. Good years, it'll hit 10%. And even if you were, say, a Warren Buffett, you're a master at investing, you're a guru, a financial genius, and you know exactly what stocks to buy. Warren Buffett's annual investment portfolio gets a return that ranges between 14% and 20%. Now, while 14% beats the S&P 500 coming in at around 8%, 10%, 14% and 20% can't touch what Bitcoin's 8-year compound annual growth rate. I mean, that's just absolutely massive. One of the important things that's in this article, and if you like, you can always find this article at Bitcoinist, or you can just simply go to Google and search Bitcoin Capital Bitcoin 8-year compound annual growth rate. You should be able to find it by doing that. So Bitcoin has almost no correlation to traditional assets. And what they mean by that is when you have IBM stock versus gold, or you have bonds versus commodities, or oil versus Forex, other fiat currencies. Those are all traditional assets, and to a certain degree, they all move together. Back in the 70s, each of them were very, very diversified, and they would move at different rates. One, stocks would go up, and another one of these investment types would go down. That's kind of what they're showing in this chart here, is the correlation between Bitcoin and other assets. And the big point that they're making here is that when gold or global bonds or U.S. bonds or commodities or any of these other asset categories are moving in one direction, Bitcoin doesn't seem to care. It'll do its own thing, even though all these other assets are moving in a particular direction. In other words, if there's another recession, a lot of these assets will go down, whereas Bitcoin will be doing its own thing. Whether it's going down or up, it doesn't seem to be related to all these other assets. And so that's when you're an investor and you're managing a portfolio of trillions of dollars, you're a hedge fund manager or you're working for some very large investment firm, you're looking to put your money into an asset that's not correlated with anything else. And you also want an asset that has a massive return. And so that's why this quote here from the CEO of Pantera was saying, if you can find an asset that has a 235% 8-year compound annual growth rate and basically zero correlation with anything else, you should own some. And that's what you have in Bitcoin. So I want to be of service to you. If you have any questions or if there's anything that you think of you Want to request anything of us, if you want to see a particular video, let me know. In the meantime, like, subscribe, and hodl. Thank you so much for listening today. I hope you have a fantastic day.